Good morning. All right. Well, it's just one of the gappers that going on here. Good morning. Good morning, Alex, Patrick. We're here. Clearing these highs here. Dan brought to my attention. So. I like the fact that it cleared the attention, that resistance right there. It's got some room, but we'll consider it. All right. So nasty day yesterday. Markets came back a bit, and they had the employment number this morning. And when I say it wasn't as good as expected, little crack in the armor there. Kind of funny after yesterday. You always wonder whether these numbers are manipulated. Who the hell knows? Anyway, just looking at the charts, and what's happened here is we've got a retest of a prior high. We're looking at the futures here, 24-hour. Retest of the prior high. It couldn't get through it. All right, there was the pullback. And we have, as you know, bonds ripped higher on this day. So it was kind of delayed reaction, like were traders and money managers asleep at the switch there and not realizing what was happening, because at the time it just seemed like no big deal. Anyway, the gap down yesterday just resulted in a trend day to the downside, which culminated in a little exhaustive move. And we don't see it here on the futures chart, but the move down, went right down toward the 50 MA there. And then, it had a pretty decent bounce considering, the day of selling and the wide range bar. Good morning, G. So that was pretty good. It ate, well, maybe close to 50% of the range. So that's why I say it was, rather impressive versus a day that closed on the low, which makes today a little uncertain as to what it does. Typically I would expect historically an inside day after a day like yesterday, especially if it had closed near the low. That would be typical. And then we'd be thinking, 1, 2, 3 continuation pattern to the downside. Whereas, with this close, and right now prices are trading a little lower, but in the area of that close. So a little bit of an odd type of pattern here. This market's been odd, to say the least. So I'm not so sure about today's direction, other than probably being an inside day, because the range is wide, right? We can eyeball that. It's a pretty relatively wide range bar. Now, to get above the high or the low, would take a bit of a move to do that. From the bullish point of view, I would prefer a move down into the first or second reversal period, and then maybe even a slight new low. And then we see if buyers want to show up and see what they can do. We'll see. In any event, that is nothing more than trying to repair the damage, as we say, where, we had this nasty break day. And then we see if we can kind of repair the damage now that we've established the bottom of a range and the top of a range, and where we go from here, whether it's continued downside or do we rebuild and to attack the top of the range again. That's the unknown, and we'll kind of see how things play out next week. And, back to the futures here, they look more like a continuation lower type of a pattern. And, you often do get different looks or pictures, with a 24-hour chart versus the day chart of the ETF. So, inside day so far. Coming from that, I come with the same conclusion of I'm not sure which way this is going to go right here. Take out the low or take out the high. We shall see. And It's just kind of housekeeping there, which, the move lower would point to that swing low, and a test of the 50 MA on the future. So I'll keep an eye on that. The Qs, they didn't recover quite as much, and they did come down to the bottom of the range, and intraday they sliced through the 50 but was able to close back above it. So, but look at the volume on that drop. So there was a pretty, intense selling yesterday. If you looked at the NYSE tick, it was negative the majority of the day. It started out on the downside at about a minus 1,200, which was a confirmation of that gap down. Now we look at tick extremes at times as the end of a move, where prices are trending down, and it's an intraday internal. It's trending down for a period of time, and say an hour, what have you, and then you get a tick extreme, and that the end of the move typically comes within 15, 20 minutes. I mean, you get an initial one, then there's often a retest, and that's where you can get a rally. Anyway, wide range bar on volume, serious bar with volume confirmation, and we'll just have to see, where this goes from here. Last year, we saw a lot of days where, this kind of ugly day just didn't go much of anywhere, and it turned back around. This one that happened here, went down another day and then stabilized, and we went back up again. Well, we'll see. Russell getting shellacked there and coming down to this relatively significant support area. So we'll see. One of the things you want to watch out for with a pattern like this is a breakdown bar failure. So from the the bullish point of view bias is where you would get an inside day today, and then next week it takes out the high of the inside day. I'm always looking at patterns and thinking of different scenarios, pattern setup. So noticing that this had these even lows here and then the continuation lower, it does possibly set up a breakdown bar failure pattern. We'll see what happens today and then next week. Anyway, there's sports down there. We'll see where it goes. Transports actually, while down, actually showed relative strength. And, we discussed the fact that the rails look great. They consolidated. They didn't go down much yesterday. And those railroad stocks, look like they could help this transportation index lead the way higher. So we'll keep an eye on those today. Equal bars. Not sure what you mean by that, Frank. Equal size bars, or are you talking like equi-volume bars? Which, if you're not familiar with equi-volume bars, okay, we're looking at the Russell there. Breakdown bar failure. Right, so what you would get is a narrow range inside bar today, near the lower half of the range, which sets up, you look at it as maybe a continuation to the downside, a 1, 2, 3 continuation. Which bars are equal lows? I'm sorry. All right. Good question. And when I say equal lows, don't get caught up in that they're perfect, because that's not how it works. But these bars, those two bars right there, the lows are relatively equal. They're close, right? So, saying it's good enough for government work, which is sloppy work, so to speak. So the lows are relatively close together, and then you get a breakdown. And so then we would see if we get an inside bar, and then if it takes out the high of the inside bar, which would be on Monday, you'd get a move higher. Okay. All right. No problem. All right. So transports, And railroads we're going to be looking at to see how they shape up. NASDAQ futures just kind of holding there. They did come down to the 50. The Dow held up the best, but a gap down in a wide range bar. Good morning, John. Inside day so far here. Oh, running in place, not going anywhere yet. Bonds down again. So interest rates are going higher. Let's get it over with. This is going to move to wherever it's going to move to, and then it's going to stabilize for a while, right? So let's go to the monthly chart. And so we've got this level here, and then ultimately all the way down here, which would correlate. Let's just kind of, all right, would be up here around 4%, give or take. And if this got the attention to get the markets going down, and this continued higher in that fashion, meaning fast, which fast would be the best thing. Let's get it over with so the markets can start digesting what's happening now, what is now. And so let's just make an area of that. So it is an area, give or take. So let's just say, somewhere in there. It could be a targeted area for yields to move up into, and then that would certainly get some more attention. And let's go back to the daily time frame. Oil had a bit of a correction day yesterday and an inside day in an uptrend. And here, well, it's not a breakout bar failure per se with the inside bar, but that broke out and failed. So a bit of a shock there all in one day. Gold just continues to stabilize here. Maybe getting interesting for a short-term trade. I like the little consolidation here at resistance. It's holding up in the face of that supply. So that's short-term bullish there. So we shall keep an eye on that. And I'll cover this in the letter on Monday. Some of you don't get the letter, but I'll just share the internals with you here. The sentiment here. I mean, I can't believe the idiots weren't jumping on the put side all in yesterday. And that's a bearish sign, because they typically, will run to the option market and bet on a crash. And when they don't, got to make you think there's more downside coming. Breadth getting somewhat to a bullish extreme, but could go lower if this market drops. A bunch down near 300 would be historically where it would go to, and then you'd get a bounce. And the intermediate gauge here of sentiment is just dead neutral, so there's gas in the tank. But look, that being said, we of course going to have a tendency to think more bearish action is coming after a day like yesterday. But let's go with the breakdown bar failure scenario, or this spiders thing stabilizes here and starts moving up. I mean, this sentiment could move up here, and then this move up to here as well, and we get a sell set up somewhere. But so we're always monitoring intermarket analysis, different markets, how they're reacting to each other, market internals, and of course the technicals. And that's what I refer to as the techno fundamental analysis and the three-legged stool of the market, where you put those all together to formulate a bias as to what's happening in the market, short term, intermediate term, and long term. I mean, we haven't talked about the yield curve. That's another discussion. Sorry, Dan, I only left you with 10 minutes to the open, but it's all yours. I'm not hearing anything. I don't know if anybody else, maybe it's me.
Oh, no, sorry. Yeah, the mute button was on. All right. Yeah, I was just showing pre-market here. They had employment numbers, 8:30, rallied, deep retracement. We just churned our way back up, stalled. So kind of, it's impressive that it grinded its way back up. Ideally, this will set up a higher low now. And then we trade above a, 5, 10, 15-minute high. And then, our scenario maybe of just grinding slowly higher, not very exciting day. We'll see. But yeah, I wish that the call ratio was bearish, and then we'd be a lot more confident to, sell put spreads and try to get some more long exposure. All right, opens here in no order. PDD, we have a way out of the money put spread that we're trailing for profits. Cisco held yesterday, our stop. So we're long stock in Cisco. Microsoft stopped us out yesterday in the, in the market sell-off. Charlie Papa, we have a put spread. We've booked half, and I raised the stop to Wednesday's low. Orly, we did a call spread yesterday, and it looks like it's, bouncing a little bit, but nothing to do. MJ, Michael Jackson, we have a out of the money put spread that expires this Friday. Moss, way out of the money put spread, that's fine. Yeah, our inventory is much lighter. Here are the two railroads we're watching. Both those look great. General Electric, we've been watching for a while. It's, got its sea legs here on the 15-minute chart, up a little bit more. Let's look at some gappers. Well, Apple, sold off with the group yesterday, but still a relative strength. Of the FANGs, this looks absolutely the best. Right? Let's look at all FANGs right now. Look, Google, horrible. Tesla, horrible. Facebook, horrible. Netflix, horrible. We've stopped, we had a directional option trade. We had a covered call and a put spread. And, trade review, it was a fantastic setup and entry. And then, we had a bearish 1, 2, 3 yesterday, and stopped out. Exit out of that. Finally, Amazon. Look at this weekly. We reviewed this into the close with Alex. That's an ugly bearish M formation on the weekly. So if you were to trade this, I would only do it short term. So yeah, we're not in the push the envelope environment, that's for sure. ADT.